Here we go. All right. Welcome to our next speaker here in the December Toasted Traders. I'm going to show you the lineup for just a second. If you're just now joining us, please don't sign out. We are literally going to cap. Like any minute now, it's going to start kicking people out that are trying to get in. And so if you're here, I would say stay put because we can't guarantee you can get back in. We are recording today's event, and we hope to get that out to you sometime probably Monday afternoon. And I want to remind you that on Todd's offer, which was tradinganalysis.com/toast, he's at a $97 price point, but only until tomorrow morning. He has already sent me a text and told me to raise the price to $297, which is going to be the price from here on. So today's the only day you can get that price, and it is what it is. All right, so you've seen Rob, you've seen Price, you just saw Todd. Our next speaker is Mr. Andrew Keene, and let me go to Andrew's topic, how to trade like a hedge fund manager, and there's my good buddy Keene in his pretty blue shirt with the flag behind him. Let me upgrade him really quick so he can take over. And we'll do a quick audio test with Keene. All right, AK, show me your PowerPoint. There he is. Look at that smile. How you doing, Andrew?
What's up? How's everybody doing today?
Y'all give him a big roll tide.
Roll Tide.
Roll damn tide.
I text you every time.
RTR.
I actually try to text you when they're losing, not winning. You know how I am.
Yeah, please don't be like that. Okay, we're Cotton Bowl bound, baby.
When they're losing, I text it, I go, Roll Tide.
That's so sweet, and that's why I love you so much. Merry Christmas and Roll Tide. All right, Andrew, you have 1 hour. Good luck.
I'm taking every single second of the 1 hour. I already told Jeanette if someone doesn't show up, I'll fill in for the other hour. I'll just keep talking and talking and talking. So what's going on, guys? How's everybody doing today? Great lineup. This is probably one of the better lineups I've seen. Me and Rob Hoffman have known each other for a while. We're both Illinois guys. He actually lives like pretty close to my parents' house. Todd Gordon, obviously one of my favorite people. We do a show every Wednesday on CNBC. If you've never seen the show, it's pretty cool. Make sure you guys stick around until the end. I'm going to give away $1,000 worth of courses for free. So make sure you guys stick around to the end. Today's presentation is how to trade like a hedge fund manager. I'm your presenter, Andrew Keene. I already see some people that says AK is awesome, the king of unusual option activity. Past performance not indicative of future results. So I trade a very methodical way of trading. I've had a very successful career trading. I've made close to $5.5 million trading, and then it's not like winning and then losing and then giving it back. That's like my net. So I probably have made, probably 10 million after all that money I lost, maybe 4 of it back. And I've been profitable 13 of the last 14 years, and I haven't had a losing year since 2006. This year has been very challenging. This has been a very hard year to trade because every time you think the market's going to take out the highs, then it reverses. And then every time you think it might go lower, then it reverses. So it's been a very challenging year. On Friday, crazy day. Thursday was a crazy day as well. So let's get through the presentation here. I multitask while I multitask, so if you guys have any questions throughout the presentation, feel free to just pop them in the questions box. I can answer them while I'm presenting. Little risk disclaimer here. Unfortunately, we have to put this in every single webinar. Day trading, short-term trading, options trading, and futures trading is extremely risky. They're generally not appropriate for someone with little capital or little to no trading experience or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risk, and you can lose your entire investment. We put that in twice because it's so important. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your registered investment advisor or broker for execution, margin, and other capital requirements. Everybody watching today's presentation adheres to all disclaimers on www.optionhacker.com and www.alphashark.com. So basically, I'm not a registered investment advisor. I don't have any client money. I just trade my own account. I only have one trading account. I actually will show you my live trading account. So this is my trading account. So there's about 325,000 in here. I just actually put a lot of money to work on Friday. And if you look here, if I did like an ROI and how much I'm up this year, 45 divided by 323 would be about what, 15%. So I mean, a decent year when the market's down, and I basically have been long only, and I still have some cash on the sidelines. So this year's been very, very volatile. I was up about 220,000, and then I had a $400,000 sell-off, and then I was down about 150,000 about 6 weeks ago. And in the last 6 weeks, I've made about another 200,000. So I'm a very, very active trader. I trade a lot, and I trade a very big quantity. So everybody has a different trading style. Everybody trades differently. Mine is to be active and to trade a lot. I trade throughout the course of the day, all day long. But what I focus on is unusual option activity. I'm going to teach you guys what unusual option activity is, why, in my opinion, it's the best thing to trade, hands down. So we watch this proprietary, LNG, I still think will bounce. We watch this proprietary scanner throughout the course of the day. There's like 1,000 trades that go across. I know Todd was actually just talking about GoPro. And we saw this GoPro trade hit the tape, and some trader came in and bought the 2017 40s. So Todd was actually just talking about that one. So I watch institutional order flow. I watch the biggest traders around the world trading options, okay? Trading stock is very, very challenging. The reason trading stock is so challenging because there's things known as dark pools. You guys have read, I want to go to the next slide anyways, Michael Lewis's book on Flash Boys. I've read it. It's basically saying dark pools, so you can't see the volume in stock. Futures are really hard as well because they're manipulated by the algos. Trading unusual option activity is really the only thing out there, in my point of view, that has consistently worked day in and day out, year after year. So this information is available to everybody. It's really, really hard to get the information. This is a picture of me from college. I'm the guy in the middle. I'm not the guy on the right. I was just a young little punk. So this is not me. I studied at the University of Illinois. I went to Champaign-Urbana, and then this is actually Humpty over here. And I became a market maker on the trading floor. I consider myself to be, equity options-wise, probably top 5, if not best trader in the world for reading unusual option activity. The Nigerians are really good. They're on CNBC every single day talking about unusual option activity, how 25% of all deal stocks have unusual option activity in it. So, I consider myself a really good trader. Anytime Hubert's on here and introduces me, he goes, Andrew's one of the best option traders I've ever seen. I go, well, who's better? Why didn't you call me the best? So I'm going to teach you guys something. Maybe you've seen this presentation before. Probably you haven't. This is a very methodical approach. Anybody can do it, beginner, intermediate, and expert. If we have time at the end, we'll go through some charts too. So I live in San Diego. I traded on the trading floor from 2002 to 2012, roughly. I now moderate and trade in San Diego. Here's a picture. I just put a picture up on Instagram of my view. I trade from home. I'm just like everybody here, okay? Everybody's sitting down at their computer, trading on their smartphone. I trade from my smartphone as well, and we're trying to make money, okay? This presentation today is to take you the first step. When you guys are trading, you got to be willing to invest in your education, okay? If you break it down, if you buy anybody's courses today, Todd's course, Rob's course, my course, what is really $99 in the long run? If you can't afford $99, you're never going to become a profitable trader. But this lineup today is some of the best and educated traders that I've seen. So willing to invest in your education. It's like saying I'm going to go to the gym once I start losing weight. That's not actually. That's not how it works. You just have taken the first step in your trading progress. Okay. We are all here for one goal. The one goal we are here today is to make more money. This isn't a webinar on saving the manatees or Greenpeace, which I do believe in, and I give money away to anybody I can anytime I'm walking or donation. But this is about making money. Okay. Everybody's here today to make more money. Take notes. Watch the recordings. But most importantly, you guys got to be willing to invest in your education. And I was listening to Price, and I think Price said that it's tax deductible. Well, so call your accountant, and you can actually get a refund on this stuff too. So I'm a moderator on CNBC, Bloomberg, Fox Business, BNN Canada. Traded on the floor for 10 years. A couple little pictures here. I mean, CNBC. I do CNBC 3 days a week, usually Monday, Friday, and then I do the show with Todd, one of my good friends, every single Wednesday. So I want you guys to remember one number in your head, and that is the number 90. You should like write it up and put it somewhere in your house. And the problem is 90% of all traders lose money. That is a fact. The average time span for a day trader is between 1 month and 1.5 years. Why is 90% of traders lose money? Number one, bad risk to reward setups. If you guys are risking $1 to make 10 cents, that's a bad risk to reward setup. Number two, not putting the probability on your side. Okay. Number three, counter trend trading. A lot of traders like to trade counter trend. They want to be buying LNG or Freeport on the 52-week low. I play a lot of poker. It always feels better to win a pot when I'm calling someone's bluff than when I have a really good hand. It's just psychological. It's the way it is. Okay. So one of the ones I'm talking about is probability, math. Everything in this world is just probability and math. Let's pick a random sport. Let's pick golf. Let's say I go out and golf with my buddy, and he looks at me and he says, hey, I'll bet you $100 I can make a hole-in-one. Well, you say to yourself, that's a good bet. He's probably not going to make a hole-in-one. So you bet him $100. But if he said to you, I want to bet you $100, but I want 50 to 1 odds, well, that's not a good bet. So the way I put probability in my corner is I watch something called unusual option activity. Every single stock has normal volume of trades in a day. Options are the same way. If it trades X over volume, it's known as unusual option activity. I'm watching institutional order flow from the biggest traders in the world. Okay, the hedge funds are smarter than us. They have access to technology that we don't have. So I want to follow them, okay? I'm not trying to recreate the wheel. I'm not trying to come up with anything crazy. I'm just watching the biggest traders in the world put money, million-dollar bets on the line, and this is how I've consistently become profitable, and I've taught over 50,000 students this philosophy over the last 4 years. Oh, I lose money on a day-to-day basis sometimes. I'm going to teach you guys how to read institutional order flow too. So we got a picture here, 3 guys, okay? And 3 guys here, Tom Brady, Brett Favre, Aaron Rodgers. And what do they have in common? You say, the first thing you probably think when you see them in common, you're like, oh, they're quarterbacks. That is true. I had a webinar, someone's like, they're all white. That's true as well. They're all righty. That's true as well. Then you say a little bit deeper, okay? Dig a little bit deeper. They have all won Super Bowls. Wow, now we're getting somewhere, okay? So Tom Brady, Aaron Rodgers, and Brett Favre has all won Super Bowls. But what is more important than that? All 3 of these quarterbacks, Tom Brady might go down as the best quarterback ever. Brett Favre is great. Aaron Rodgers, unbelievable, okay? But more importantly, all 3 of these quarterbacks started on the bench. They did not come into the NFL and start right off the bat, and they didn't start and they didn't win Super Bowls. They sat on the bench. Rodgers was on the bench for a couple years. Tom Brady backed up Drew Bledsoe. Brett Favre backed up Don Majkowski, and Aaron Rodgers actually backed up Brett Favre. So these 3 guys that are Super Bowl champions, that know what it feels like to win, sat on the sidelines for years and years and studied the playbook, okay? And that's what I'm going to teach you guys today, the playbook to become a Super Bowl champion, okay? You know, guys that come into the league that start right off the bat don't do very well. You know, we have a joke in the office. If you want to learn how to trade, light $100,000 on fire. Why would you not study from someone who's been a seasoned pro and has historically made money over time? And that's what I want to be. I want to be your guide. I want to be your mentor. I want to give you my playbook that has worked so well for me over the last couple of years, like 14 years. So you say to yourself, Andrew, that's great, but why do we care about unusual option activity? It is a fact that institutions have more edge than we do. They have better access to technology, information, manpower, and capital. So these guys basically sit in a room. They say this stock's going to go here. They tell their option guy. He comes up with a strategy, and then they place bets on their trades. And some of these bets are $1 million plus bets. And these are what I trade throughout the course of the day. And I'm going to teach you guys how to read this unusual option activity. Ooh, okay. So what is unusual option activity? Unusual option activity is driven by institutional order flow. Unusual option activity is an order that is above average volume in a given stock. These orders give us insight to institutional order flow. Let retails see where smart money is going. So let's just break it down. There are 8,700 stocks that are publicly traded. There are roughly 4,199 stocks with options. I will trade anything that is based on unusual option activity. Okay? And there's actually a couple really good websites where you can get these trades of these institutional order flow for free. So let me just show you a couple of these websites here that you can get this order flow. You're not going to understand it till you take the course, but there's a couple really good sites. Trade Monster is one of those sites. Sorry, Option Monster. So go to Option Monster, and they give you some trades. Okay, so these are all unusual option activity trades that go across the tape. Okay, bearish, bullish. Another one is Options Insider. I think it's Options, the Options Insider. I always forget that one. So there's a couple websites that really focus on this, okay? Unusual option activity. If you guys have ever seen the Nigerians on TV, Peter John, they talk about this unusual option activity, okay? There's a couple sites where you can get this unusual option activity for free, but you got to understand what it is and how to trade it. So out of these 8,700 publicly traded companies, 4,199 with options in there. I will trade anything possible. I will trade to the long side and to the short side. Think about how you guys are personally, okay? And most of trading isn't the setup as much as it is, you know, where's your risk, where's your reward, and how you're setting up the trade. Most people enter a position either long or short. Just the way that our brain is, okay? Some people are big short people that they always think the market's going to go down. And other people always think the market's going to go up. So just think to yourself, when you initiate a trade, do you initiate on the long side or are you initially on the short side? When I'm trading, I'm almost 50-50. I will take short positions and I will take long positions. What is it based on? It's based on institutional order flow. So I watch this order flow all day long, and I'm going to give you guys my playbook of how I break down every single trade to be a potential profitable trade or not. Can you distinguish a short seller with puts from a long hedger buying puts? We're going to talk about that here in a second. So there are 8,700 publicly traded companies. There are 4,200 with options in there. I will trade any stock possible, okay? Every stock has usual volume of trades in the day. If it trades X over its usual volume, it's known as unusual option activity. So let's say Facebook trades 100,000 options in a day. If it trades 200,000 options that day, that will be 2.0 times usual volume. If it's not usual volume, it is unusual volume. And I gave you guys a couple of the sites where you can get this order flow if you want it for free. Free is usually good. The problem with those stuff, they are delayed about 30 minutes because it takes time for them to write an article. So what I watch is a scanner throughout the course of the day that shows me every single trade across every single exchange. So I watch about, I would say, 1,000 trades going across the tape, and then throughout the course of the day, I only take about 4 to 6 of them. And I'm going to teach you guys my proprietary based trading plan of how I go through these trades and figure out if it's a potentially really profitable setup or not. So why is unusual option activity the best way to track big money? Okay. Think about the order process. Options market is the only market that cannot be manipulated, okay? If you're trading stock, good luck to you. The problem with trading stocks is there are dark pools where you don't actually see some of the volume trading and it goes in at the end of the day. So if you think you can read the tape trading stock, day trading stock is one of the hardest things to do. Futures, good luck. Futures are heavily manipulated by all the algorithmic trading out there. Doesn't mean you can't be profitable, but they always know where trader stops are there. They run the stops and reverse them. There's so many written codes. One of my really good friends was one of the first traders to write algo-based trading for the S&P 500 futures. Futures trade Forex trades very well technically. I'm sure Todd, I actually used to watch Todd on what was it called, the Forex show, Forex Currency in Motion, every single Friday. And Forex trades great technically. The problem with Forex, it's a little too slow for me, okay? Options is like trading stock, but potential I could get a better return on investment. I saw a trade in Boeing where Boeing puts went from 60 cents to over $6 in 2 trading days. So let's look at this one real quick. So let's put this signal in, and I flagged this to all my subscribers. So trader bought, you see right here, it was the Boeing, so it's these, the DS47 puts, okay? Look at these guys, and I'm gonna show you guys why this was a good setup, okay? Trader bought BA DS147 puts for 55 cents, okay? Do you wanna know where those went? Those closed at $7.50. Is that right? $7.50, yeah. So those closed at $7.50, guys. $7.50. So if you got into this trade, you could have potentially made what, 12,000% returns in 3 trading days, guys. And this is what I'm going to teach you. Why options are the best to trade. And someone asked a really good question. You know, are options, you know, always speculative? Okay. There's only 2 ways to trade options. There's calls and there's puts. Simple and easy. Then out of that, you can either, an institution can either buy calls, they can sell calls, they can buy puts, or they can sell puts. Sometimes a trader buys puts against a long stock as protection. Sometimes they buy calls against a short stock as protection. And I'm going to teach you guys in my proprietary based trading plan called the Oak Rivet Trading Plan. You can write it down if you want. I'll go over it for you guys. OCRRBTT, how you guys can know and increase the probability, okay? So going back to that golf statement, you know, if my buddy actually hit a hole in one and he made that shot, yeah, I would have not made money on that. But the probability is on my side. I was talking to someone yesterday, and I was saying, you know, I'm basically really good at game master theory, okay? I'm not going to make money every single day. It is almost impossible to make money every day. I'm not going to make money every week or every month, okay? But there's a reason that this kind of order flow has consistently worked over the last 14 years, okay? And I just want to share it with you guys. And this is one trade in Boeing. If you would have taken this, you know, you could have made 12,000% if you bought, let's say you bought 20 of these, okay? If you bought 20 of these, that would have been $1,100. If you held those until Friday, it would have gone up to $7.50. So you would have made $14,000 profit on one trade, guys. This is why I teach you this, okay? When you trade stock, a stock can move what, 2%, 3%? That's not going to make you any money. An option can go from 55 cents to $7.50. And that's why options, hands down, are the best thing to trade possible. Okay. So let's talk about the process of this. The institution will create an order based on research, information, and analysis. They call their broker to get the trade executed. They will then shop the order to trading desks all over. They call Citadel, Goldman Sachs, Barclays Bank. The trade is then executed in the trading pit. After it's executed in the trading pit, it becomes what is known as a public order. Okay, let me repeat that again, guys. Once it is executed in the trading pit, it is known as a public order. Once it is traded, I can trade off of that information. So it doesn't matter if a trader has insider information or not, because by the time I get to it, it is a public order. So we all know, because we're smart traders, that hedge funds have access to technology and information. They know when deals are going to go down. As we just talked about in Boeing, if I knew a stock was going to go from $10 to $20, would I play options or would I play stock? Well, options are going to give me a better return on investment. So I would play the option market, right? So I get access basically to potential insider trading, and it's all public information. How great and how cool is that? There was a big seller of LNG puts like on Wednesday. I would probably bet with a 90% chance that was actually Carl Icahn, okay? Imagine if Carl Icahn said, hey, I'm going to put on a bunch of positions. Do you want to take a percentage of this, okay? Why would I trade on my own when I can have the best traders in the world, in theory, trading for me? Are there non-public orders and how do they affect it? There are non-public orders, but you don't get access to those. So everything I watch throughout the course of the day is public information. Okay? Hey, who are these three guys? That's what we just talked about. Are these guys all Jewish? I'm Jewish. Carl Icahn on the left, as everybody knows, Carl Icahn's probably one of the smartest activists out there. We have David Einhorn. He's been in the news for, and then Bill Ackman, Herbalife, VRX, and these hedge funds, these three guys outperform the market, not necessarily every year, but consistently over time, right? So if any of these individuals say, hey, I'm going to take an option trade, this is my trade, because I think this, this, and this, okay? These are the guys that I want to mimic. It's like in golf, okay? Would you rather learn how to golf by someone who basically has golfed and read 100 books on golf, or would you rather learn how to golf by the best golfer in the world, okay? Tiger Woods. I've been trading unusual option activity every single day for 14 years. I'm watching these three traders and potentially other traders. They know more than me. They're smarter than me. They have more money than me. And through the option market is the only way to get the potential returns that you can get in trading. There's women hedge fund people, but these are like, I would say in the hedge fund community, these are probably the three biggest names. So we're going to talk about what unusual option activity looks like. I'm going to break that through a possible trade. And like I said, guys, you guys can go to Option Monster or the Options Insider and get these trades for free. And then you can take my proprietary-based trading plan and figure out if it's a potential good setup or not. So here's a trade in Boeing, okay? I'm going to walk you through the steps of the trading plan to figure it out if it's a potential good setup or not. So this is a trade in Boeing, okay? And a trader bought, so let me just break it down for you. I think the annotations pop up. Trader bought 3,735 Boeing December 147 puts for 55 cents, okay? So this gives the trader the right, but not obligation, to control 373,000 shares of stock to short it at 147 between now and December expiration. I watch a lot of webinars. I see a lot of other people present. People give examples from like 2 years ago, 4 years ago, you know, even 6 months ago. I give you examples that I've taught my subscribers how to potentially make money with, I mean, I use examples in the last couple days. There's no reason to show an example from 2 years ago, because there's a reason that we've sold, how many courses we sold? We sold over probably 10,000 courses in the last 4 years. And the reason for that is because this kind of stuff, you know, works for any kind of trader, beginner, intermediate, and expert. You need to be willing to invest in your education, you guys, to get your trading to the next level. So a trader bought 3,735. Boeing, so BA's ticker, December, 47 puts, 4.55 cents. Okay, couple things that are really important. Opening positions. In the option market, there's only two types of positions, opening or closing. That's it, simple and easy. Volatility is here. As a beginner trader, you don't need to look at a lot of volatility. So we see the volume is 3,700. The open interest is 575. So someone comes in here. Yeah, I use the Ichimoku Cloud. Someone comes in here and says, I think Boeing's going to sell off. And they're taking a $200,000 bet on Boeing selling off in the next 3 days. Okay, if they held this position until expiration, that 200,000 would have turned into, I think, about $3 million. So that $200,000 bet would have turned into $3 million. Obviously, nobody has capital to trade this much. But if you guys just came in, you went through the trading plan that I'm about to teach you, and you said, hey, volume versus open interest, how does it look? Hey, how does the chart look? Hey, what's my risk and reward? Hey, what's my time and my target? Let's say you bought 20 of these. Let's say you're trading on a smaller account, and you just bought 20 of these, and then you held these until Friday. You would have made $14,000 of profit on just a 20 lot, guys, okay? On $1,100 of risk. Where are you ever going to take a trade where you risk $1,100 and you turn it into $14,000 in 3 trading days? You can't, okay? Stocks move 3, 4, 5%. They're boring. Futures, same thing. It's hard to trade against the algos. Forex, a little too slow for me. But in the option market, the return on these kind of options is crazy. Yeah, you could lose your entire investment, but you got to be willing to risk money to make money. You cannot just sit there and say, hey, I want to make money, but you're not willing to risk it. Just think about any business. Probably a lot of business owners in here, a lot of people have worked for other companies. You know, you got to be willing to risk money to make money. So let's see Boeing here real quick. Yeah, we're going to talk about the technicals too. So we see here, let's go through everything. And we're going to talk about how you know it's a potential as a hedge or not. Okay, so we see the green, that shows us bought or sold. So these are bought. We see the quantity, 3,735. This is the right but not obligation to short 373,000 shares of Boeing at 147. We see the type, calls or puts, that's it. We see the price traded, 55 cents. The timestamp, and either opening or closing. This was an opening position. And then we see where Boeing was trading at the time, 147.98. Okay, so this is everything you need, and then you go through the trading plan that I'm about to teach you. Just like all those Super Bowl MVPs, Brett Favre, Aaron Rodgers, Tom Brady. They did not come into the league until they read the playbook, studied the playbook, okay? I'm giving you part of the playbook today. I'm basically giving you the first couple plays of the playbook so you can study those, and then in the course we're going to talk about, it gives you the rest of the playbook. You guys need a playbook to take your trading to the next level. Like I said, we're all in here for one reason. It's to make more money trading, okay? I'm not going to sit here and say I'm going to save the manatees today. I just want to make more money. Every single morning when I wake up at 6 a.m. in San Diego, my goal is simple and easy, to make more money that day, that week, that month, okay? Why? because we need to pay our bills, we need to support our family, we need to buy nice things, okay? We all need to make more money, and I'm teaching you the playbook how you can potentially make more money. Here's an example of PMCS, okay? We're gonna give you one more example and then a couple more examples, and then we'll go through the trading plan. So we got a couple more slides here. So this was in PMCS here, okay? So a trader, same thing, guys. Trader bought 14,726 PMCS January 7 calls for 85 cents. You see opening position. We see opening position, guys. We want to know what the opening position. So this was a $1.2 million bet. Someone came in the option market. Is the OCC or the SEC prosecuting this guy for insider trading? The answer is no. So I am, in theory, trading on insider information, but to me, it's all public. Okay, I cannot get in trouble at all, even if this trader gets in trouble. Why was this trader not prosecuted? The OCC and the SEC does not have the manpower to go after every unusual option activity trade. I've written papers about this. Bloomberg, CNBC, Fox Business. The reporters call me all the time. Do I think this is insider trading? Absolutely. But the SEC and the OCC doesn't have the manpower to this. There is no dark pools currently in the option market. And until there is dark pools, this is the only way to trade, and this is the best way to trade. So a trader bought 14,000 calls. That is the right, but not obligation, to control almost 1.5 million shares of stock. What happens 2 days later? Not a week, not a month, okay? And a lot of people that have taken my course saw this trade. I think Option Monster put out an article about this. They took this trade and they made huge, huge profits. So let's look what happened just 2 days later. Wow, how interesting is that? This trade that they bought these calls for 85 cents, okay? And the stock was trading, we don't have the stock in here, but right around, I think around 680 or something. 2 days later, guys, this stock gapped up to $10, okay? These January 7 calls that they bought for 85 cents went from 85 cents to $3.50, okay? Hypothetically speaking, if you bought a 20 lot of these, just 20, okay, $1,700 of risk, you would have made $5,000 profit, okay? This is probability. This is math. This is finding the best traders in the world and mimicking their position. I'm not playing the lottery. I don't buy random calls and random stocks. What do I watch? I watch the institutions come in there and tell me what is going to happen. I have been trading this philosophy for 14 years. I've taught this to a lot of students. I continue to teach it. This is my #1 topic. This is how I've made all my money. And a lot of my subscribers and a lot of my students have now taken this philosophy and taken this playbook and used it on their own. And that's what I'm here to teach you today, the Oak Ribbit Trading Plan. Here's an example in craft. Okay, one of my subscribers emailed me and just sent me a $400 bottle of wine because he made $300,000 on this trade. Okay, and he didn't even have a big position. KRFT, Kraft. Okay, there's news. I think Buffett came and bought it. They merged with Heinz or something like that. So this was from June. So this actually is a little bit while back, but this was such a huge trade. These calls in Kraft. The June 67.5 calls, okay? When we buy options, guys, the most we can lose is if the option goes to 0, okay? So you have limited risk and you have, in theory, unlimited reward, okay? If an option goes from 40 to 50 cents, that's a 25% return, just like that. So this order came across the tape, and then what happened to Kraft stock? Is this a coincidence that this trader came in to buy June 67.5 calls, 5,000 of these, okay? So he took basically a $200,000 bet, 5,000 at 40 cents. What happened? the stock went from 62 to 82, okay? And I could sit here and I could probably fill all 6 hours of every single presenters today of examples of what trades have made money for, you know, subscribers or students of mine. That's not what I'm here to do today. What I'm here to do today is teach you guys the trading plan. Teach you guys the playbook that Brett Favre learned, that Aaron Rodgers learned, that Tom Brady learned, to take you from a backup quarterback to a Super Bowl MVP. So this is an example here in Craft. So this is the proprietary-based trading plan. The next slide is going to be. So why take these trades? The hedge funds and big traders have more information than us. Simple and easy. That is why they're always getting in trouble for insider information. Trade with the pros. Imagine knowing Carl Icahn's or David Einhorn's positions before they are disclosed. And most importantly, these are all publicly traded orders. So I'm going to walk you guys through the Oak Ribbit trading plan. This is what I call the secret sauce. If you have a smartphone, take a picture of it. If you want to write it down, write it down. And this is how you can go through any order in the option market and figure out if a trade is potentially a really good trade setup or not. I call it the Oak Ribbit trading plan. The first thing is open interest. So I look at the volume versus the open interest. Volume is how many options traded that day. Open interest is how many exist standing. Chart. I want to know if the chart lines up with the trade. If I see calls being bought on a 52-week low, I think they're potentially buying calls against a short stock position. If they're buying puts on a 52-week high, I think they're buying puts against a long stock position. And then we have R&R. Some people like rest and relaxation. I don't really like that. I get up at 6 in the morning, usually 5:45 every day. Break even, and then we have T2T. San Diego created tacos and tequila. I love tacos and tequila. But what's important is time and target. If you just walk through every trade, guys, and you use this secret sauce and this trading plan I'm sharing with you guys today, you could potentially have taken that trade in Boeing, Kraft, or PMCX. So this is a trade in Boeing. Let's just go through the setup here. Trader bought 3,735. So let's start with our trading plan. Okay. Let's say I went to Option Monster, the Options Instigator, if I wanted free information. Okay. There's ways that you can get this information if you pay a little bit. But let's just say I went to one of these sites and they had the Boeing trade up. And you said, hey, I listened to this guy, Andrew Keene, and you know he gave me this great trading plan, a great playbook. So let's see if this is a trade that I want to potentially put on. So first thing we talked about in the Oak Ribbit trading plan is the O, which is volume versus open interest. The volume on this trade exceeds open interest, okay? I only want to take trades where the volume exceeds open interest. Simple and easy. If volume is less than open interest, I do not want to place a trade. So volume is greater than open interest. My first step has been met, okay? And I put this in order for you guys of importance. So the most important thing is volume versus open interest. If volume is not greater than open interest, I do not want to take a trade. Okay, simple and easy. Volume is greater than open interest. If its volume is less than open interest, I don't want to make a trade. The bigger the order of the size, the more I want to make this trade. Okay, so the bigger the open of the size, the more I want to make this trade. So this one is about 6 times volume versus open interest. If this order was like a 20,000 lot, I would have bought 500 of these things, okay? So the bigger order, the more I want to risk on the trade. But I want volume is greater than open interest. Then we go to the chart, okay? I'm a big Ichimoku guy. If I'm looking at December options, I probably want to pull up like a 15 or 30-minute bar. If it's a position that's 3 months out, I want to look at the daily chart, okay? I use Ichimoku Kinkin Hoi. You guys can use any charting or technical analysis you want. It just depends on what you guys like. But I use the Ichimoku Cloud in my trading. So when I look at it, if calls are being bought on a swing trade more than 3 weeks out, I want to make sure that the chart is bullish. If puts are being bought, I want to make sure the chart is bearish. For a beginner, if it's under the cloud, it's bearish. In the cloud, it's neutral. and above the cloud, it is bullish. Oops. So we see here in Boeing, okay, and this was Boeing on the 15-minute chart. This is exactly where they bought him, okay? As we can see here, this is a double top. Any technical analysis, you can read Candlesticks for Dummy, will teach you a double top and have two bearish candles. So right here, a trader bought puts, okay? Right here, a trader bought puts. So this is actually pretty neutral, but the order is so big that it makes sense to take this trade on the double top here. What happens? Boeing goes straight down. Then we go to R&R. Some people like rest and relaxation. I do not. So the first criteria was met. Volume versus open interest exceeded. The second was the chart. Yes, the chart made sense too. We saw that double bottom, double top, and then we saw two bear candles, which means the stock is headed lower. Number three, R&R. Like I said, some people like rest and relaxation. I do not. I want a risk versus reward setup. Even if I'm wrong, how much can I lose on a trade? I talk about it if you're a beginner using a 20% stop loss, intermediate 50% stop loss. I'm an expert trader. I don't use stop losses. But you can look at how much you're willing to risk as a percentage of your total book or as a dollar amount. Okay? Never get into a trade if you don't know how much you're willing to lose. Simple and easy. Good traders think about how much money they can make. I'm not a good trader. I'm a great trader. I say, if I am wrong, how much money can I potentially lose? I look at that every single trade. Okay? We're not in the land of the hopes and dreams. There's no holy grails. I'm not going to go to the store, buy a lottery ticket, and expect to win. When I buy a lottery ticket, I say, hey, how much can I lose? So any great trader, and you guys need to tweak your strategy and philosophy. You need to move from good traders to great traders. Think about how much you can lose on a trade as a dollar amount or a percentage of your total book. Stop losses, we just talked about it here. 20% stop loss for a beginner, 50% stop loss for intermediate, and I do not use any stop losses. Who is a beginner? I consider anybody a beginner who's been trading less than 6 months and hasn't proven that they consistently can make money. Intermediate, someone who's been trading for 6 months to 2 years that makes money but doesn't make enough money. They need to make more money than they're currently making. An expert trader, someone like myself that trades over and over, has consistently been profitable year after year after year. Risk is my number one concern. It should be yours too. I told you guys to remember a number at the beginning of the presentation. That number was 90. 90% of all traders lose money. That is a fact. My goal in this industry is to teach and educate you guys all to become better traders. I'm wired that way. My father retired at a very young age, and then he took every position possible that wouldn't give him an income. So he was president of the Temple. He was president of an inner city education program called Youth Guidance. He basically took every position that wouldn't pay him money. That's kind of how I feel when I teach and educate you guys. I don't need to wake up on a Saturday to teach and educate you guys unless I really care about you guys and I want you guys all to make more money. Okay? This is why I continue to work so hard. I write so many courses, I write so many books, because I have so much knowledge about trading, because I was taught by the best traders in the world. And I want to take that information and teach it to you guys. Okay? 20% stop loss means if you buy an option for $1, you put a stop loss at 80 cents. Time and target, this is up to your own discretion, but you're going to take off the trade at a certain period of time, and what's your targets, okay? If you're using stop losses, we have proprietary-based targets as well. So here's Boeing. If you bought it, remember where the signal was. The signal was right here. On that day, if you bought a 20 lot, in less than an hour, okay? If you bought 20 for 55 cents, 20 lot, not a big order, guys. This is like beginner, 20 of them, $1,100 at risk. Let's say you put a stop loss in, okay? Put a 20% stop loss in. So you actually, let's say you risk to 40 cents. So you bought them for 55, you put them a stop loss at 40 cents. So that's 15 cents on the 20 lot. That's $300. Okay? So let's say you risk $300 on this trade in less than 1 hour. This isn't a penny stock, guys. This is real publicly traded companies. This is watching the biggest and best traders in the world trading. Okay, that 20 lot, you're risking $300. You could have made $2,200 profit. If you held them all the way to Friday, you would have made $14,000 of profit. Okay. Here's a couple testimonials from our subscribers. Like I said, guys, over the last 4 years, I just got in this industry a little bit, more recently. In the last 4 years, we've taught over 50,000 students. 4 of my former students are now my moderators. So my students have now become the professors. We've sold close to 5,000 courses in 4 days, and this is our hands down #1 course. We have over 13 courses, and I came today, Jeanette asked me, she said, bring the heat, kid, bring the best course you have, because we're going to have a lot of people, and we have a bunch of speakers today. So Charlie said, I want to take this opportunity to thank you for sharing your trading experience. Having joined the trading room, I made $27,000 in craft this morning. Thank you for unusual option activity plan that you taught me. And I just taught you the unusual option activity plan. So Charlie made $27,000 on this trade. Matt said, as a new options trader, I lucked into a seminar about unusual option activity in August. Thank you, Scott. Scott's saying I'm the best. In August, my first week generated over $1,000 in profit. And just yesterday, one trade delivered $2,000 of profit. So Matt, being a smart guy, started small. As he makes money, he increases that. Steve says, it helps to stay in a trade to maximize profit and helps on reversals, and this is just my first day. Wish I had this 29 years ago. Wow, he's been trading longer than I did. I recommend this to everyone. Great job. Your team deserves kudos. So what we have, guys, I gave you the beginner trading plan. I gave you the first step of what you can do to potentially make more money. I'm going to put the link in here. So we have a complete course about this, okay? The Unusual Options Activity Trading Plan Workshop. On demand, plus what I'm going to give you guys is a live bonus session. We only have 50 spots available. We will sell out within the next 15 minutes probably, so make sure you guys get in. What I will teach you in this workshop is why call buying is not always bullish and put buying is not always bearish. How to read option volume versus open interest. Why average stock volume is important for day trading and swing trading. What to look for to differentiate between speculative options and those against a hedge. Okay, we want to know when it's a hedge. When are they buying calls as a hedge against a short stock position? When are they buying puts? Okay, this course takes what I taught you today and puts probability in math into your favor. When a position is opening or closing, you'll get an overview of the Thinkorswim scanner. Also, what we're going to do is throw in a live trading session on January 20th at 11 a.m. Eastern, and that'd be 8 a.m. Pacific. Okay, it is only $97, guys. You guys should sign up. optionsonthefloor.com/thirsty. I will say 4 things about this, and then I have about 7 minutes left where we can go through a couple charts or I can answer questions. Number 1, 100% money back guarantee. If you buy the course today, you don't like it, you say, AK, I didn't like the course, I didn't learn enough, I do not want your money. Okay, I do not want your money if you guys are not learning. So basically, you can almost, take the course because we're going to give you the 100% money back guarantee. We only have about 3% that ever take the course that actually ask for their money back. So number 1, everybody should sign up immediately because it's a money back guarantee, me personally. Number 2, we have 50 spots. We will sell out of this course. Number 3, we personally at alphashark.com have 13 courses. 13 educational courses, from candlesticks to Ichimoku Cloud to unusual option activity to earnings. This is our number 1 course. Simple and easy. So if you said I wanted to do, if I wanted to take one course, which one should I take? This is our number 1 selling course. Simple and easy. And number 4, which is most important, you guys have to be willing to invest in your education. This is the number one thing that I can say, and I'll say and say and say and say and say. Okay, it's $99 or $97. That's like, nothing. Like, I went to the farmer's market, I bought my dog a toy, and like, I bought a couple books, and like, I do a lot of reading. That costs me money. I need to advance my education. Okay, and I think Price made a great point. Then you can write it all off. If you cannot afford $97 to increase your education and take your potential to the next level, you shouldn't be trading. Okay, simple and easy. Jeanette, options on the floor. .com/thirsty. Did I put the wrong thing in there? Hold on a second.
Just a second. I'm posting it. Oh, wait. Hang on. Let me look. Maybe it's supposed to be toast. I think
I'm getting an extra hour to talk.
Oh, gosh.
I'm going to talk for another hour.
It's toast. My fault. Toast.
You sure?
Look how smart you are. Yeah, I just tested it. I'm sorry. I noticed it was different this morning, and I should have mentioned it to you. My fault. I'm taking total fault here.
I'll get another hour.
Look how good you are on the fly. Look at that. That's what a trader has to do, right? Block and tackle. Boom.
So sorry about that, guys. The option is on the floor /toast. Okay. So here's the link. That one's working. Good. Make sure you're one of the top 50. I promise I'm sorry, Jeanette, but I'm going 5 minutes over. I don't care. You can kick me out if you want to. Okay, we're going to give away $1,000 worth of courses. The first person to get this question right, I will give a free course to. The first person to get this question right, I'm giving a $497 course. This course is usually $497. It's 80% off. The question is, where did Brett Favre go to college? Where did Brett Favre go to college? Number 1. First person to get it right. Southern Miss. You have a right answer. Southern Miss, Steve Napady. So Steve, congratulations. You won a $497 course. I promise I'll give $1,000 worth of courses. So Steve, you won a free course. Okay, $497. So just email me which course you want, and I'll give you it for free. Other question. I got one more question here, and then I'll talk about the course one more time, and maybe we can go over 5 minutes of chart. Okay, next question. For a free course, I got to see the right answer first. I have to look up the right answer. The question is, how many Super Bowls have the Patriots won? How many Super Bowls have the Patriots won? Oh my God, there's so many people guessing. I have to find it. The answer is 4. So the first person that writes 4, which was Ray. Ray was the first person, the first guess and the first person. So congratulations, Ray. You won a $497 course. Email me which course you want. You go to our website, and you get any $497 course for free. So $1,000 worth of courses I just gave away for free. Let's talk about the course one more time, and then we'll give away about 5 minutes worth of questions here. I'm going to go 5 minutes over. Sorry, Jeanette. Make sure you guys sign up. The inbox is blowing up. Steve is in. Jeremy is in. Barbara is in. I'm just reading through names. Kristen is in. This is good for any type of trader, beginner, intermediate, or expert. If you guys are not willing to invest in your education, you shouldn't be trading. Simple and easy. Go find a different job. Find financial freedom. Find going on vacations somewhere else in the world. So this is the unusual option activity trading plan workshop. It is on demand plus the live bonus section. What you'll learn is why call buying isn't always bullish, why put buying is not always bearish. You will also learn why average stock volume is important. Day trading and swing trading. We'll teach you a trading plan in there as well. What to look for, if it's speculative or a hedge. When a position is opening and closing. Also an overview on how to use the Thinkorswim scanner. And plus the hour of trading. Options on the floor /toast. 4 things I'll say about it, and then we'll go for 5 minutes of chart. Number 1, 100% money back guarantee. So if you take this course, you go through the course, and you don't like it, I think it's a 6 to 8 hour course, you will get your money back. Okay? That's how much I believe in this course. If you guys are not learning, I do not want your money. Number 2, we will sell out. almost 100% chance of it selling out. So make sure you guys get in now. I mean, we're probably going to crash the website because we're going to sell so many of these. But make sure you guys get in optionsonthefloor.com/toast. Number 3, this is my number 1 selling course. We have 13 courses at Alpha Shark that we've created in the last 4 years. This is my number 1 selling course. Someone emails me, they said, hey, AK, I want to take the first course. What should I take? 100%, this is it. This is the best course we have because this is how consistently I've been so profitable throughout the years. Number 4, this is on demand. So the minute you take it and pay for it, you can start learning for it immediately. Okay? So if you take it, you can start learning immediately. So when you buy this course, you get it immediately, you can start learning, and you own it for life. You own this course for life. And number 5, you got to be willing to invest in your education. If you do not have $97 right now, you can put on a credit card, you shouldn't be trading. Just leave the webinar and find something else to do because you need to be willing to invest in your education to take your trading to the next level. We are all here for one reason and one reason only. It's to make more money trading. You have to be willing to invest in your education. You know, $97 is more or less nothing. For a 6 to 8 hour course, it probably took me 10 years to write. 10 years of the trading for it to write. So we're going to go over we got about 5 minutes here to go over charts. So just throw out any charts you guys want, and I'll look at them. I'll say bullish, bearish, neutral, and then where I'd potentially get in and out of a trade. We'll do 4 minutes of charting. I'll go 3 minutes over. IWM. So I look at it on the daily chart. I use the Ichimoku cloud. It's actually breaking the cloud to the downside. However, I don't think it's a short because this is where a possible double bottom here at 110.25. I would actually look for a breakout to the upside on the cloud. Pandora had that ruling in Pandora. The stock spiked up to 16. I think Pandora is a short. I could have shorted it on the close of that bar, 15.22. I think Pandora actually goes lower. SPY, you know, the market got smoked on Friday. And I've been long only. It is in the cloud here in Pandora and SPY. I don't think the break to the downside is a good short. Right now, it's actually pretty neutral here. And I think there's going to be buying pressure until the end of the year. Baidu. Baidu is actually above the cloud. I could potentially buy Baidu here with a stop in the cloud. I'd wait for a bull candle. I don't want to be buying on a red candle. I want to be buying on a green candle. DB, Deutsche Bank. Deutsche Bank looks like it's headed straight lower. I could short on the red bar, stop above the green bar. Deutsche Bank definitely goes lower. Kellogg. I like the food stocks. I think they're all going to merge, like General Mills, Kellogg. Kellogg's was the strongest stock. I think Kellogg's a buy here with a stop under 68.80. Stop under 68.80. Let me put the link in here. A lot of people are asking for the link. It's options on the floor /toast, guys. Options on the floor /toast. Let's go through here. Calm, CALM. And you're going to get that 1 hour of trading with me live too, which is always cool. So you can watch me trade unusual option activity in real time. Calm is a short here. I think Calm goes lower. Fossil. We got 2 minutes left. Fossil here is under the cloud. I think Fossil is actually a short. I think Fossil goes lower. UNP, Union Pacific. You know, I think the railroads would be doing good if gas is going lower than the. It kind of looks like an oil stock here in UNP. If it holds 74, not 78, it might be decent contra trend trade, but it looks like it's headed lower here. TRN. Got about another minute of stocks here, guys. I think TRN goes lower. Everybody always wants to see Apple. Apple. I think Apple does not break 91 ever. That long candle here, I don't think it ever breaks 92. It is technically setting up a short to the downside. Should find some buying pressure around this 104 level. So if it goes off, I think it will. Facebook. Yeah, actually one of my courses on Ichimoku is I can go through this. Facebook, I think, is a screaming buy. I think this solves an opportunity. So, unusual option activity course, guys, on demand. You'll learn all of this information. We sell this on our website for $497. It is 80% off. Last time I'll say it. Make sure you guys sign up. We have limited amounts of spots. Number 1, 100% money back guarantee. I do not want your money if you are not learning. Optionsonthefloor.com/toast. Number 2, we have 50 spots. When we sell those spots, we are done. We're going to raise the price back up to $497. Number 3, you have to be willing to invest in your education. You cannot afford $97. If you like the presentation today, you have to be willing to invest in your education, and you have a money back guarantee. Okay? I don't want your money unless you're learning. Number 4, You have it for perpetuity. You can go through it as many times as you want. It is the #1 selling course we have. We have 13 courses, and this is our best course. So optionsonthefloor.com/toast. Thank you guys so much. Have a great day with the rest of the traders. I actually will be here listening to all the traders, and I will see everybody. Enjoy the course, guys. It took me a long time to write. It's my pride and joy to educate and teach you guys. Hopefully I brought a lot of energy. Hopefully you guys learned a lot today. You learned basically the Oak Ribbon trading plan and how you can take my playbook and use it in your trading arsenal. This is great for a beginner, intermediate, or expert. Thanks, guys, and have a great day. I love you, Jeanette.
Oh, that's so sweet. Thank you for loving me.
I said that in front of 700 people.
Gave you the wrong link.
It has to be true.
Oh, so it means it's true and it's recorded. So
you know,
I got you on. I got you on recording, saying that you really care about me.
You go on the rooftop of in Paris and you scream it on the top of the rooftop. This is what I just did. I love you, Jeanette.
Oh, I'm gonna frame it forever and ever. Take a picture of yourself saying it. Thank you, Andrew. Okay, so he is optionsonthefloor.com/toast. Let me take the ball away from Mr. Keene and give it back to myself. Where am I at? Okay. All right, so can everybody see my PowerPoint now? Should still be seeing Mr. Keene's face. Let me save this real quick.